Hello all traders and investors, welcome to Strike. In today's video we are going to discuss about a very important tool for option traders, that is multi-strike open interest. So we have recently launched the options module in Strike, within which you can see various tools. So I'm going to cover multi-strike open interest today. So for the prerequisite to understand this video well would be a good understanding of what are options, what are call options and put options, and what is open interest. So for those of you who are beginners, open interest is when a buyer and a seller come forward and enter into a contract, and it is known as a open interest. So one outstanding position in a stock or an index is known as one open interest. So I'll first explain you what are the features of this tool, how to use it, and then we'll also discuss one practical example. So firstly, you have the option to select the symbol for which you want to see. You see any of the FNO scripts and the indices. You have the option to see data on any of the as of dates. If you want to see data for yesterday, you can change the as on date, and for the latest date, it is by default selected. You can also change the expiry for which you want to see. You can also view the raw OI number or just the OI change. In case of OI change, it will start the reading from 0 from the morning. And then you have an option to see combined OI. So what combined OI will do is combine the open interest across all expiries, and you'll see the sum of that. And next is intraday. So if you are interested only in today's data, keep this option clicked. If you disable it, it will load last few days of history so that you can see the trend of open interest. Now the first one is selected strike, where you can manually select the strikes for which you want to see the data. Another one is trending strikes, where the system will auto select the strikes which are currently trending based on their change in open interest, and you can see the trend in those strikes open interest. And the next one is near at the money strikes, so within which you can select how many strikes you want to see near the money, be it 1, 3 or 5. So it will select that many strikes and show you the OI and the trend. Now this is the daily chart of the Nifty index. So we'll try to see if we could have caught any of the up moves or down moves with the help of multi-strike open interest. So the Nifty rallied from 10th of January from about 21,618 low till the high of 22,115, and then fell back sharply on the 17th of Jan. Okay, so this was a 4 to 500 point rally and then a same amount of fall in the index. So let's try to judge it from the help of open interest and multi-strike OI. So now the moment it crossed 22,000 here, now 22,000 was a major psychological level. So we'll see it with the help of options open interest also. Here I am at the open interest screen for Nifty. I've selected the as of date as 15th. So I can see that 22,000 strike has a high amount of put open interest as compared to call, which means now this data is to be looked at from the writer's point of view. So as you know, buying an option is way cheaper than selling an option. So if there is a huge amount of OI, which means some strong hands have sold options at those strike. So in this case, put writers will incur a loss when the market starts going down, because put prices will go up with the decrease in price as well as increase in volatility, which will mean losses for the put writers and profits for the put buyers. So now we know that 22,000 was a major level to look at. Now we'll try to look at the open interest of both call and put together. Now I've loaded the multi-strike open interest chart as on 17th of January, and I have manually selected the strikes 22,000 call as well as 22,000 put. Now note 18th January was a weekly expiry, so I'm looking at 18th January expiry data, and I've disabled intraday option, so just I can see the trend of the data. So the blue line here is the price of the Nifty, and this turquoise color is the open interest of puts, and the orange line is open interest of the call. So as you can see, before the top was formed, the Nifty was going up and the put OI was significantly building up, showing us the confidence of put writers as compared to call writers. Now what happened on 16th was, you can see during the intraday dip, the OI of the 22,000 put declined sharply, and 22,000 put, the 22,000 call increased sharply. So this was close to 1:40 p.m. in the afternoon when this OI touched again, but then put OI increased back, but call OI did not go back to the levels from where it picked up. So now the call writers were getting active as well. What followed was a big gap down on 17th of January. Now, even if the gap down could not have been predicted, what you can see post the opening is that significant decline in 22,000 put open interest, which means the put writers were running for cover, and the significant rise in the 22,000 call open interest, which means now the call writers were in control of the market trend. And you can see even post the gap down, the trend remained down, and Nifty fell further from 21,800 to about 21,600. So there was another fall of about 200 points. Let us look at the similar example on the Bank Nifty chart. So Bank Nifty also saw a big fall on 17th of January, post which on 16th it posted a doji candlestick. So here I have loaded the Bank Nifty multi-strike open interest as of 16th of January, and I've selected 48,000 strike because the price was closing near 48,100. So 48,000 was a big psychological level that was nearby. Now naturally you can see the put OI was higher than the call OI since 15th of January, since the index was trending up. Now what happened on the second half of 16th trading session was, you can see the put OI saw a sharp decline towards the end of the day from about 9,53,000 contracts to 9,15,000 contracts, and the call OI picked up from 7,86,000 to about 8,99,000 contracts. So this was what was seen on 16th. Now let's go to 1 day forward. Let me select the 48,000 strike again. Now you can see post the gap down opening, there was a huge pickup in the call open interest and a huge decline in the put open interest, which would mean that the call writers now can stay in the power of the trend now, and you can see the downward trend continued for the Bank Nifty index as well. Now this is just one way which I use multi-strike OI. You can also look at multiple strikes at once and just the trending ones or the near ATM strikes and do your own analysis close to significant tops or bottoms. So in my experience, what I have seen is it works really well when you use it for the psychological levels, like the round numbers and not the smaller strikes like the 50 strikes in Nifty or the 48,100, like 48,200 kind of strikes, but the round number strikes like 48,000, 48,500. So such analysis now can easily be done in Strike and you can customize everything. So if you like this video, do like our channel, do like this video and subscribe to our channel, and let us know if you have any questions. We'll surely try to answer the queries in next video. So thanks for watching. Thank you.